This content is for educational purposes only and is not investment advice. Analyzing the trade mechanics, the FIG ticker shows a significant contract activity for July 24, 2026, with a $29 call. The volume to open interest ratio is an impressive 355x, indicating aggressive buying at the ask price, with a total premium of $2.66 million. The 355x volume to open interest ratio is a critical indicator of trading intensity and institutional positioning. It signifies a strong conviction in the market, often preceding significant volatility and potential trend reversals. The risk profile for the FIG position expiring on July 24 resembles a lottery ticket. With the position 23% out of the money and only 8 days to expiry, there's high upside potential if FIG gains momentum, but the premium could expire worthless if it doesn't hit $29. Market sentiment is divided between bullish and skeptical views. Aggressive buying indicates strong conviction, while sophisticated hedging strategies suggest caution. This dual sentiment reflects the complexity of interpreting trade activity. Several catalysts could drive market movement, including earnings reports, product innovations, M&A speculation, and sector rotation. These factors are crucial for price discovery and volatility. Investors should avoid chasing high-volume prints, use unusual activity as a guide rather than a recommendation, and manage risks carefully. These practices are essential for navigating market volatility. Visit iStocksHub.com for more AI insights and unusual options activity.